Welcome, folks, to a new video update with me, Mo, a trader and a system builder. I have over 10,000 hours in market analysis. I have done testing over 100 plus indicators for you and build my own dashboards and tools. Today's we will be watching a couple of very important key data, what's happened after the first cuts, where the market's going and where the pivots are, exactly how the corrections happens over the last 150 years. It has been repeating itself, and we will be going through the dark pools. New data came out. The most important thing is we will dive first with a friend of mine and his chart. Arthur over here have done a very beautiful analysis when it's coming to the S&P 500. He said the market repeat itself, and it has done it in the last Trump presidency. So what's happened? The market corrected itself, done a V shape, then went straight very fast up and corrected very sharp in the Corona session over here. And he's saying right now it's gonna be the same. We're gonna go higher over here, and it's gonna correct itself. After that, a very sharp move to the down below to the area of volume weighted average price. That's being said, very important to understand what's going on in the market. Let's first of all look at Bitcoin over here. The volatility of Bitcoin is increasing and people turning into the early panic zone. We went from smart money is buying and retail trader is selling into the more important one, the panic. And the panic in the markets is usually very important signs for institutional traders to buy or sell the markets. That's being said, let's watch what's happening with Bitcoin as I got an alert around here. Right now, we are at the support level of the parallel channel, right? We said, is it going to be ABC correction? We said it's going to correct itself, all likely to go upside. Both scenarios were possible, right? And one of them were probable. I'm still looking for my targets lower, as this guy always showcasing that based on his moving averages over here and the weekly chart, 3 week chart over here, we see is also targeting around 96,000 and also 49,000. So when you see alignment between couple of traders and investors, then usually there is something in it. So when everyone is seeing the same things and the market didn't move yet, then basically all traders, majority of them will be right. That's being said, let's go into charts of today's. The first one we want to watch is who gonna be the Trump nominated as a Fed chair. First, we have Kevin and another Kevin and Christopher. So people are polling markets are betting that's gonna be Kevin Hassett who gonna be taking Jerome Powell positions. We still 6 months left for Jerome Powell to be in his chair and decide for the cuts or raises the interest rates or remains as it is. The second thing I want to share with you is after the first cuts over here, what happens, right? We see clearly the first cuts open here. Usually the market tends to go higher, right? But sometimes it corrects itself when we watch this area. So when we watch this area over here, it is tend to be correcting itself, and what we have seen a rise in the market after the first cut basically will be continuing that, or it's gonna be 2019 the Corona crash, which is led to a correction. But I basically think correction could happen, and it's still there is space for some correction, and it's gonna be very healthy for the market itself. Second thing is when we watch the Fed pivots, it's always gonna be correction in the markets. We've seen Fed's pivot, another pivot. Over here, is it gonna be a third pivot? And each time those pivots happens, we see tends between 35%, 27% to 58% market correction, which is a huge one. So when we watch those correction, is very important to understand majority of investors miss out those this area over here. When we watch it, right, this area over here, Exactly. It takes a lot of time to get to the break even level if you are an investor. Of course, if you are a family office with some money or a hedge funds, you don't want to tend to go to the 51% correction, right? So the law of large forces, if you have 51% correction, we need more than 60 to 80% upside movement to gain back to the break even level, which is over here, right? And after that, a second crash, it is gonna devastate and you're gonna lose a lot of investor, and you don't want to be in that position. If you have 100 million, you're just left with 40 million, which is very painful. Even losing 1 million is very painful for many people. That's being said, we want to move on with the second chart over here, which is very important. In the last 180 years, we have all seen financial condition tighten before the end. What does it mean? The markets start financial condition to be tightened, the stock market stay rallying, and after that we see a massive correction. We see a massive correction in Japan and the same in the US and following Britain. Why that is happening is very important to understand. All those central banks following America, including the Europes, because America has very powerful and political view, and if they don't do it, they lose a lot of power and negotiations in terms on export and import of goods. What's also very important to see over here is this chart. I think when we look at the small cap ETFs flows, we see the rolling 3 months flows turns into positive after 8 months, right? That's a very good sign in terms of it continuation to the upside, right? In continuation to the upside, and the small caps are could be a winner over here. We talked about that in September, as we said, after the first cuts, that this next 2 months is going to be a little bit sideways to bearish, and after that, the small caps catch up and start moving. That's being said, let's move on with the charts of dark pools. Dark pools are institutional traders who trade between each other off the markets, which is called OTC, over the counter. Those dark pools, usually we don't see if they are buying or selling, but we see clearly some activity over here is happening, while the IVV iShares ETF, the S&P 500, basically is seeing a lot of interest over here. And especially when we saw those dark pools activated upstairs, right? And a second one, and each time it has been activated, it has been a sell position, and we saw a correction, and right now it's going to be an upside position. We will see that soon enough. And the final chart I want to showcase it to you is how cash versus credit card consumer preferences, how it influences it. So we see over the last couple of years, we see clear a trend. People tends to spend more money when they have a credit card, even more money if they have a mobile phone, right? When you go to the cashier and you pay with your mobile phone, the people tends to be and consuming much more because they're getting detached from the actual value, this amount of the money they are spending, while the cash spending is decreasing, more digitalizing, it's getting more and more. Will digital dollar take over the world? We will see in a couple of the years, and majority of crypto guys are fearing that it's gonna be the case. So what we want to else watch is Ethereum, because we had a short position in Ethereum. We talked about this position over here. We said, okay, if it could go higher, we adjusted our stop loss and we said it is more probable to go lower, right? Right now we are at the support zone over here, and exactly looks like kind of accumulation. And if we turned our volume charts, etc., on the 4 hourly, we saw a bear signal over here, which is not telling us a lot, but we want to see the volume, what's happening in the volume side. So is there a lot of interest on the buys or on the sell side? We see low volume in that range. A lot of people is scared of where the market actually is going and what's going to happen in the crypto space itself. It's gonna go higher or lower. A lot of people still bullish, but I will stick to my position that it's gonna be a correction, and that correction it could happen very fast. So we got rejected basically, or we're still in that zone of accumulation, right? It could be an accumulation zone over here. As we said, the view of the volume weighted average price is tends to be a zone, and it could move up and down in that zone. And if you lost it, it means more bearish than bullish. So for me, it just looks like more bearish than bullish, because we touched it, we got rejected, we tried to breaking through it, and we got rejected again. It seems to be following the natural moves of the parallel channel, because we are right now also at the support level, not only based on the candlestick, but also based on the middle of the parallel channel, right? It could go higher again, and we touch it right here, and lower, and the final breakout over here and goes higher, right? So if we extended the parallel channel something like this, right, and we said it's gonna break out somewhere here because it's more logical, right, to be that case, and going back to the area of 3,500, which is has been psychological, and a lot of orders waiting around 3,550 to 3,650 in that zone to be liquidated, a lot of shorts to be liquidated. That's being said, we're going to be watching that zone very carefully. Let's go into the futures of S&P 500. We said it's gonna go lower if it doesn't go higher. Right now, we see a couple of support of the moving averages of 200 moving average, and the 100 moving average is supporting it in that level exactly, and with still some bearish signs over here. So the next support level is around 6,700. That's being said, is to keep in mind those levels are important to understand, because those are support and resistance level we want to watch. We want to check, because not only of that is also because of the parallel channel which we broke outside of it. We saw decrease in the volume, and we saw a lot of interest in shorting the market. We see, okay, let me showcase it to you over here down below. We see a lot of redness in the volume of here, so people are shorting it aggressively. So it could be the case we get rejected and we move lower. That's being said, keep in that mind that scenario is very possible, and it could happen. We got rejected by the parallel channel, which is the green one over here, right? Let me turn off all those indicators, and we see that parallel channel has been tends to be a resistance level more than support level. We got rejected, and we're trying to push lower. So either case over here, we need to see something like this moving higher a little bit, right? So we said we want to see it move it a little bit higher over here, and after that straight forward, breaking it like a bullet through it, right? So what we don't want to see is there is a couple of traders we need to see them get trapped. Those are market structure traders, right? So those market structure traders basically gonna see this one over here and say, okay, we are making new highs. Higher highs means it's gonna be correcting itself a little bit, and they're gonna be taking the trade. So we want to liquidate them all. So those people who are gonna take those trades, we want to liquidate them. So we want to maximize the pain in the market. Marks like to trap people, like to make them feel a lot of pain till they say I cannot take it more. And if you realize that what is happening in the market is usually tends to be a good buying points for myself, of course, I have realized that. If you have another strategy, happy to hear it in the comment section. Share it with me what's happening in the markets and what you usually see. That being said, we have covered Bitcoin, couple of data after the Fed cuts, what's happening in the dark pool sites, and where the market is going. For myself, it's still unknown to be exactly where the market is going. It tends to be more shorts with 60% probability and 40% for long sides. As my friend over here also is saying, it could go higher, then we're going to be liquidating everyone, which usually makes sense, because a lot of amount of the debt which US has to pay in 2026, and Jerome is leaving, and Trump is looking forward to pay the debt of the US by invading Venezuela, maybe by distracting everyone so no one cares about what actually the Fed doing while the war is going in Venezuela. It could happen, possible, but we don't trade the news itself. We trade accumulation of news sentiment. What doesn't mean accumulation of news sentiment? We want to watch the holistic view of the market, what's happening actually in the news industry. Majority of time news like to spread the fear out there, and then so everyone watching the news is already in the price majority of the time also. So you want to watch a specific set of time frame, for example in a week. What's topic has been talking in this week about a specific asset, about S&P 500, and about the global itself. So China, will it be another move for it to be a winner and the money flowing to China? And gold, I want to showcase gold also, right? So on the gold side, we see clearly gold jumped crazily over here, and we can draw a couple of line charts. Majority of time, don't take those line charts very seriously. You want to combine it with price and volume and sentiment. So if you have the price and volume and sentiment, you can see clearly what's going on in the markets. We're still in that resistant level, and even we could do even a better chart analysis over here, which I like to do. I like those parallel channels. It tells me a lot of story what's happening. So right now we could see a correction over here where the market's going. So either is this a triangle correction over here, or is this a parallel channel? In that case, you want to keep in mind, if you take a short trade over here, right? Let's say we want to take the short trade, and majority of time market likes to fake it, right? It says if it goes above here, a lot of people will liquidate. We want to put our stop loss above it. So I like to put my stop loss above it, so I know people who get liquidated, it's going to be acceleration movement of the price. Okay, it doesn't mean actually the price is moving, it's just acceleration of liquidation. And this is very important key point to understand in trading. When it's we talk about those moves in those areas, is majority of time is acceleration of liquidations. So we have over there that, and if it goes lower, we want to take profit over here. First one at the middle of the parallel channel, right? So we want to take profit over there. And second thing, we want to have a couple of confluences, right? The first confluence is already there. We have value area high of that range, and we want to have fixed range value volume profile over here. We see also a support from that. So we are ranging over here. We want to have a confirmation based on other indicators. So it's already telling us, right? Look at this. Majority of people just need to read the volume correctly. Over here, we see a decrease, and after that decrease, we see two big candles in volume, which is telling us the story. A lot of interest in shorting it. So the market didn't move yet. So we saw two candles with a lot of volume, and still the buyer sides keep the position, but eventually they will lose the head over here, and we go lower as we have tends to move above that range of moving averages, and also above the parallel channel. So we are on the top of the parallel channel. We are above the moving average. The volume is telling us a story, and we see some divergence, kind of divergence. The market is tends to do a higher highs, and we see a lower lows on RSI over here. That's being said, we want to keep an eye on that. Golds, it could not go forever that high. We see a huge move on gold since August 2025 over here with 30% already plus upside movement. It's gonna go higher. We will see. The most important thing is this possibility, which I like to see over here, is that it gonna correct itself because of the value area high and also potential early sellers over here, right? So this is still a resistant level. So this resistant level to need to be respected. So we need to see some kind of correction at this resistant level. Majority of people would expect that, and we could see an W or M formation on the charts. What does a W and information look like? We go higher, then we go lower, and we go again high and again low. And from here, we will decide either we go lower to downstairs to the VWAP volume average weighted price, or we're gonna go higher from here and make all-time high to 5,000 even psychological level. That's being said, on those key commodity bitcoins and S&P 500, the security markets and equity market over here, keep in mind everything is possible. Look for probabilities, look for confluences, what is matching, stack your indicators, stack your ideas, stack the macro and stack the micro, and detach the economy from equity markets. So economy is a delayed mark tricks for equity markets. Sometimes the stock market is tends to move before the economy, and sometimes economy tends to move before the equity market. You need to see that very clearly. In that case, we have more likely that economy is moving before the equity market. People still very bullish on EI and what's in EI market is going on with OpenEI, looking forward to trillions, 1.5 trillion, I think, in investment to expand their servers and the agentic AI, and the same for Meta, which is the Facebook Zuckerberg looking an investment for 600 billions and more. Everyone is investing in that, and some energy. You can think about energy company which is going to benefit from there. Majority of people thinking about nuclear energy because of its efficiency. Second of all, it's a lot cleaner than other type of energy, and third is giving us tremendous amount of energy, and all those servers can be powered. So that being said, if you like this video, keep a like, comment down below, and share your ideas with me in the comment sections. And if we reach 10 likes, I will do another update. Stay safe out there, and very important, always manage your risk.